Hello friends, a 7 billion pounds giant construction company collapsed almost overnight. It was one of UK's biggest corporate failures. Hi, my name is Pratheej and welcome to Deep Dive into IFRS. It's the Carillion PLC 2018 scandal that I'm talking about. A gripping story of inflated revenues, hidden losses and multiple IFRS violations that fooled the markets. And in the end, it all came crashing down. Let's analyze this one by one. What went wrong at Carillion? See, Carillion PLC wasn't just another construction company. It was everywhere. Hospitals, schools, defense sector, corporate sector, you name it. But by January 2018, they had to file for compulsory liquidation. And what's the result? Thousands of jobs lost, around 7 billion pounds of unpaid liabilities, unpaid vendors. See, because of multiple malpractices, the books looked fine on paper, but there was no cash flow. It was absolutely dry. The IFRS red flags. Carillion PLC was in breach of mainly IFRS 15, IAS 38, and IAS 1. Let's look at them one by one. IFRS 15. What Carillion did was they were very aggressive in recognizing revenue, and this was based on hope that the revenues might come, not on actual progress. But if you see, IFRS 15 clearly tells that the revenue that you recognize on your books should reflect the actual progress of the project. But here, nothing of that sort was done. It was entirely hope, and even when the losses or delays in the project completion were becoming obvious, they did not bother to reassess the revenue and be conservative in reducing the revenue, which reflects the actual progress. The next one, IAS 38, intangible assets. The Carillion PLC had two main costs. Number one, bid costs. Number two, mobilization expenses. Bid cost is the cost that you have to incur when you're applying for a tender. It can be anything right from the application fee, tender deposit, which might be refundable or not, etc. etc. Whatever you require to apply or participate in a tender, all that comes under bid costs. The second one, mobilization expenses, is something when you get a project, you have to onboard a lot of staff, you have to set up stuff, you have to set up equipment, etc. All these comes under mobilization expenses. Carillion PLC capitalized both of these. Now, why is this in breach of IAS 38? See, only when an identifiable asset is created can some expense be capitalized. So, if you take bid cost, there is high uncertainty. There is no guarantee that the tender will be definitely awarded to you. So, without knowing all this, there is no provision in IAS 38 that allows you to capitalize bid costs. So, that was the wrong part of accounting when it comes to bid costs. When it comes to mobilization expenses, there were just setup costs for service providing. There was no development of an intangible asset. So, because of this, both of these costs should have been taken to the P&L. They should not have been capitalized as per IAS 38. Now, IAS 1. Carillion had large receivables and contract assets from some problem contracts, some Middle Eastern projects that were getting delayed indefinitely, to be precise. But despite all this, they did not impair these assets, despite knowing that there is poor recoverability chances. They did not disclose these assets as high-risk assets. And instead of reporting losses that were actually piling up, they reported profits. And finally, they never gave any early warning signs until the situation became irreversible. All of this made the books of accounts look pretty much fine on paper when the actual situation was very worse. Now, what was the impact of these IAS 1 violations? Carillion PLC misled the investors, regulators, the creditors, and the public, and their delayed corrective action worsened the collapse. And finally, the most important one, they violated the letter and spirit of IAS 1, especially the going concern concept. Why did Carillion PLC do all this? It's the usual story, guys. They wanted to show profits and maintain dividend payouts. They wanted to keep their access to loans and credit lines. They wanted to avoid downgrades and panic in the market. And finally, they actually wanted some time for a turnaround, which unfortunately never happened. They basically needed to look profitable, even when they're actually not. What was the impact of this collapse? After the collapse, there were around 7 billion pounds of unpaid liabilities. Thousands of jobs were lost. There were unpaid vendors. A lot of pension deficits were there. There was a full-blown parliamentary inquiry. And lawsuits were filed against the statutory auditors, KPMG. See, this was not just a financial oversight. It was a systemic failure where the rules and statutes were not followed at all. Now, finally, what can we as professionals learn from this? Capitalize revenue only based on performance and not ambition. Disclose impairments and risks as they happen, and only capitalize stuff when they meet the criteria laid down in IAS 38. And when it comes to long-term contracts, be skeptical. See, accounting is mainly about trust. Numbers are secondary. Once the trust breaks, everything else is gone. So that was the Carillion 2018 scandal, guys. I hope this was informative and useful to you guys. If there is any other case that you would want me to discuss, please let me know in the comments. Until I see you in my next episode, thank you for your valuable time.